if they really try to normalize rates to really fight this inflation, everything would unravel.
This week's specials with Miles Franklin Precious Metal Investments. 100-ounce and kilo silver bars for only $2.69 over spot, and 1-ounce gold bars from the Rand Refinery for only $65 over spot at 1-888-81-LIBERTY. That's 1-888-815-4237.
This is Elijah K. Johnson with Liberty and Finance. And back with us today is Mario Innecco, Minecco64 on YouTube. Mario, thank you so much for joining us today.
Oh, you're welcome. And it's nice to be with you here talking about things.
What I wanted to start out with is the big news about inflation, 6.2% in the U.S. right now. Your perspective on this and where we're headed. I know last time we had you on, you said once you embark on the inflationary road, it's hard to stop. And that seems like what we're seeing. You know, inflation started to creep up. It was at around 5% for a little while, and now it just continued to increase. So your perspective where we are now and where we're headed.
Yes, I spoke about that this morning in my daily video. And the way I like to look at inflation is the classical definition. That is the creation of credit and fiat currency. In the past, it was the creation of money and credit when we had sound money out of thin air. And we've had inflation basically in spades since the collapse of 2008. And what we're seeing now is, I don't know if you're familiar with the term Cantillon effect. The inflation first flowed into financial assets. It flowed in stocks, bonds, real estate, and now it's finally starting to flow massively into consumer goods, into services, into commodities, and that's the bad kind of inflation, so to speak, for the powers that be, for government and the central bank. Whenever the stock market and the bond market and housing are up, that's not a problem. But now, I'm not surprised. And as I said in my previous video, when you start on the road of inflation, it's very hard to get out of it. And I think we're way gone past where the Fed can reverse, and the ECB or the Bank of England or Bank of Japan, they can't reverse policy. And I'm afraid what's going to happen, we're going to continue to see the dollar, the euro, all the fiat currencies decline in value. They're not going to collapse, but they're just going to be buying a lot less. And I think the move in precious metals is confirming this. Gold didn't just go up in dollars. It went up even more in the major currencies like the euro, the pound, and the yen.
With the Federal Reserve right now, they did announce that they're going to start tapering by $15 billion a month. This isn't really a reversal, though, because they're still creating more money. They're still expanding the base money supply at $105 billion per month. So this isn't a contraction at all. It's just a slowing of the increase. I know last time the Fed started tapering, though, from their $85 billion a month back many years ago, they were able to actually draw down the balance sheet eventually. But then, the COVID crisis hit and everything like that. So your perspective on what do you think the Fed will do going forward? Will they actually go ahead and taper as they said they have? And will there be a contraction, or what are you expecting in the near future?
Yes, if the Fed was really serious about fighting or combating inflation, they wouldn't taper. What they do, they just stop doing the QE because tapering is just like a very slow way to. It's like a drug addict, lowering the amount of drugs that they're taking instead of just stopping and going cold turkey. So they might, the Fed, depending on the bond markets and the Treasury yields yesterday, jumped up double digits in terms of basis points. So if we see a continued drop in bond prices and uncontrolled rises in yields, they might actually say, oh, we're going to pare back the taper. We're only going to do 10 billion or so. Or if the markets stay pretty steady, they might actually say we might increase it to 20 billion. But right now, like you said, they're still going to increase their balance sheet or the money, base money, by about just over 400 billion in the next 8 months. So it's crazy that we have CPI running at 6.2 and the base rate, the Fed funds target is near zero. I remember when I started in the business, we used to put money on deposit. That was a big part of my job in the back office where I started in the fund management firm, was confirming all the deposits, all the trades. And I remember really well, one client had a certain amount. They put it in 3-month euro dollar, which is dollar deposits outside the US. And it was paying 7.25% annualized for 3 months, 3-month money. And this was around 1991 when the CPI, I think that was the last time it was as high as it is now. So right now, I think the three-month money, I don't know, it's 0.5% or something. So it's crazy. And if they really try to normalize rates to really fight this inflation, everything would unravel. I guess they're between a rock and a hard place. What they're going to try to, their only hope is that the CPI starts dropping, or who knows, they might, the Bureau of Labor Statistics might change the calculation of CPI to make it look lower. I mean, that's what they've been doing since 1980. They've been tinkering with it. I don't see any other way out. So instead of, they might come out with a new formula to make it, and they'll say, oh, we're going to smooth out the increases because of the volatility in commodities. So you could have a new CPI, instead of being 6.2, it's going to be like 3. And then if we drop from 6.2 to 4, which is still a high rate of increase, then the new one might be a 2. Who knows? But I don't think there's any way out for the Federal Reserve.
It is very interesting because, it doesn't seem like there's a way out of high inflation coming soon because nothing is changing, really. The Fed is still creating a lot of currency, and also we're seeing supply chain issues, which will just boost prices more because there will be less goods and the same amount of people going after them. So that seems like it has to just be constant inflation now. Seems to be, it will be persistent. It's not going to be transitory.
Yes, we're getting basically we're paying for all the creation of money and credit that we've had in spades since the '08 crisis. I think central bank balance sheets around the world, they were around 3 trillion before the '08 crisis. And I think now they're like 35 trillion. And they've done a good job of fooling people into thinking that there's no side effect to creating all this money and credit. But unfortunately, I think the rubber's meeting the road right now, and we're paying for that. Basically, we're paying for all the bailouts of '08, all the QE, all the stimulus, fiscal, monetary. So we're paying for that. And inflation or rising prices is just basically a tax.
And we did see an impact on precious metals right after the CPI, right when the CPI was announced. We saw a big spike in both gold and silver. And as we're recording this on November 11th, we're continuing to see a rise in the precious metals. So how do you think longer term this inflation will have an impact on gold and silver?
Yes, it was encouraging. I was looking at the market yesterday when the numbers came out. Actually, gold and silver came off slightly uh, immediately after. I think gold was around 1824, but all of a sudden it just switched around and went up and broke that key 1833 level on the spot price. And yeah, I think we traded up yesterday up to 1868. Silver got up to like 25.12. And today they're continuing. Silver right now is 25.18. It's up 50 cents. Gold is kind of, I mean, it hasn't broken yesterday's high. We were 1860, still up 11. And the encouraging thing was that the dollar is very strong versus other fiat currencies, but which means that the other fiat currencies also, they broke out really important levels, long-term technical levels, both in euros, in sterling, and Japanese yen. So I think it's very encouraging. If you look at the gold and silver prices in the 70s, they topped around 1975, and it wasn't until 1978 that they started going back up, that they actually broke the high from 1975. And that's despite the fact that the whole 70s, you had inflation above 5% almost every year. So yes, I think gold and silver will more than prove that they are a hedge against not just inflation, but the reckless monetary policy and also fiscal policy of governments and central banks. And I think it's encouraging. It has been a frustrating 15 months in precious metals, but precious metals are tough. I've been following precious metals since '02, and it always seems like you're fighting something, but you have to be patient, and it will pay off, I think. I can't tell you what price we're going to see in a month or 2 months, but over the long term, there's no way out for the fiat currencies. They're going to go down in value, and they can really only go down in value if they want to debase their currencies, the central banks and the politicians. And I think they do, because it's a lot easier to carry the debt. They can only do it versus real money. You see, you can't have the dollar devalue against the euro or the yen or the yuan, because those countries then will try to match. So it's like a race to the bottom. And the only currencies that they can't devalue against are gold and silver. So yeah, it's very encouraging. And I've noticed also that the mining stocks are doing very well as well.
With respect to inflation and government spending, your perspective on how the infrastructure bill will impact all of that?
Well, they're trying to sell it as a necessary plan, and they're saying we need all the infrastructure spending to improve the bottlenecks in the supply chain, and to make the economy more productive. But I've never seen a government really do anything that improves the economy. And it just seems pretty outrageous that they're coming out and saying the more government spending we have, the better it will be for the economy. I think, unfortunately, people have been used to the Keynesian fallacy for too long, even under the previous administration. I think the last budget deficit to GDP was about 5% under the Trump administration. So it's something that runs in both parties. And I think the solution to make things better for the economy would be for government to shrink. But they have this idea that the government has to do to kickstart the economy. That's what they tell us. So I don't think it's going to improve. It's going to make it worse. It's going to debase the dollar even more. And I wouldn't put it past them to come out with more infrastructure, even though politically it's probably going to be a little tougher now with what happened in Virginia. I think the Democrats are going to probably be a little bit more cautious about, allowing more infrastructure spending. But if we have another crisis, the Fed the other day warned against Evergrande. I think it came out on Monday with a paper saying that Evergrande could affect the U.S. economy and the financial conditions. So you never know. Evergrande seems to be in trouble, deep trouble. There's a lot of it's not very transparent about the payments, and we're seeing yesterday there's a German company that said that they'd invested in Evergrande bonds and they hadn't been paid. And then Bloomberg came out with a story later on and said, oh, we heard from these people, even though that they had been paid, even though we can't use names because. So it's still very opaque. And I think they could use that. You have another big crisis. We're going to see it will be very easy to get more infrastructure, and even the Republicans would probably join in. So, and the more the Austrian school, like von Mises, he speaks about that in his book Human Action. That what the statists or the Keynesians do is they think that the more they do, the better it is, but the worse it is really because you crowd out the productive and private sector of the economy.
With respect to Evergrande, how do you think that might impact the U.S.? Is it because the system is so interconnected nowadays? What is your perspective?
Yeah, definitely. That's the interconnectedness of the system. I think their foreign bonds equates to about 18 billion of their balance sheet, and I think their liabilities equate to about 300 billion. So a lot of those liabilities are domestic, but a lot of their banks are on the hook for that, and it could impact the whole world because China isn't like a small emerging market economy anymore. It's a little bit like the U.S. People used to say when the U.S. sneezes, the world catches a cold. And I think it's going to be the same thing for China. And there are some banks like HSBC who have a huge exposure to Evergrande. And HSBC is one of the too big to fail banks. And that could impact the too big to fail banks in the U.S., in Europe, all around the world.
Now, many people who have been calling us, inquiring about precious metal bullion, have been talking about that they don't feel safe with their money in the banks. Your perspective on that, as we see this Evergrande situation, and you mentioned ties to the U.S. and the U.S. banking system, how might this impact, our viewers who have money in the bank, right? Do you think that money in the bank right now is a secure place to store wealth?
Even before Evergrande, I've been telling my viewers, not advising them, I just give my opinion that I'd rather keep as little as possible with the banks, because when you put your savings or your money in the bank, you're actually lending to the bank. Legally, it's an unsecured loan. And a lot of the insurance schemes like FDIC in the US, in the UK, it's called FCSC. The insurance, the pot that they have to pay off these all the deposits, I think the US is 250,000, is like a fraction of all the deposits around the banking systems. And if you have a systemic crisis, that FDIC insurance will be worthless, and so will the FCSC in the UK. So it's a little bit like Tether, that stable coin. It's supposed to be 1-to-1, but we know that there's only 3 cents to every Tether. So the FDIC, there's probably only 3 or 4 cents to every 100 cents. And the same thing in the UK. So yes, I know there are businesses, of course, small businesses, or like me, for example, I have to keep some cash in the bank for my expenses and also for tax liabilities. So it's always tricky. And but if there is a problem, they can always resort to bail-ins as well, which is basically they don't the banks don't go under, but they basically take your deposits above the insured level. So if you had 250, let's say you had a medium to small size business, had $1 million with the bank, their business account. If they did a bail-in, they would take everything above 250. So you would lose out $750,000. That's what they did in Cyprus. This is done before. And they've spoken a lot about that because politically it's a lot easier to do that than to do a bailout, because bail-ins hurt more the wealthy, and bailouts really politically it punishes everyone because all taxpayers will be on the hook. So yes, that's why it's impossible to run a business without cash in the bank, but that doesn't mean you can't have some insurance, which is of course physical gold and silver outside the system.
You mentioned physical gold and silver outside the system. We talked about this last time about the kinds of precious metals to invest in. A lot of people, and I get this question all the time, ask me, well, what if there's a worst case scenario? What is going to be most trusted? And I know last time you talked about how, the mint of the country that you're living in might be the best idea. Your perspective on that, like if it does come down to, the whole system does crash, what kind of metal is going to be the most trusted?
Yeah, like you said, the coins of the realm, so to speak, they're always they'll probably be easier to transact with, like in the US, all the 1964s and before, the junk silver or constitutional silver, they're great to have. Or even the US mint bullion coins. In the UK, the same thing. We have prior to 1947 is 50% silver, and then prior to 1920 is 925 silver. I have some of those in the bullion coins as well. But in the end of the day, I think if everything implodes and the fiat currencies collapse, I wouldn't see why, let's say, a farmer or someone who has a business wouldn't accept a silver bar or a gold bar either. It doesn't necessarily need to be, coins from your own country, but it helps.
When it comes down to it, I think having something of precious metals is going to be better than nothing. Right now, sometimes it's difficult to get the coins of the realm, especially here in the United States. They have much higher premiums right now. And I think what you're saying is having something rather than nothing is definitely the best way to go. But Mario, we really appreciate your time today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online?
Yeah, I'll just add on a little bit to what you can use when there's a crisis. It's not just gold and silver, but also cigarettes, alcohol, anything that people need. Those things are interesting as well for bartering. I'm not telling people to go and smoke, but there's a lot of different things as well. I think in Germany after World War II, cigarettes were like a currency. So yeah, and also knowing people in your community and helping each other out. That's another way of bartering your specialty versus someone else's specialty. That's the other thing to do. So as far as where the viewers can get my material, they can go on YouTube. My YouTube channel is Innecco64. I'm also on Twitter, Innecco64. If you're on Twitter.
Mario, thank you so much for your time today, and God bless.
You're welcome, and God bless, Elijah. Take care.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded for physical delivery, vault storage, or precious metals IRAs. Excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.